Hello, everybody. Welcome at this first plenary session here at this year's fully online fifth event. We are both very proud and excited to bring to you our first guest, Marc Faber. Dr. Faber is a world-class investor known for his edgy and contrarian investment approaches, which have given him the nickname Dr. Doom. And he's also the editor, the author, and the publisher of the Gloom, Boom and Doom report, a report that is widely read across the globe. And he is the author of many, many best-selling books, one of which is Asia's Age of Discovery, which has featured many weeks on Amazon's bestsellers list. Dr. Faber, can you hear me okay? Can you hear me?
No, unfortunately, I really don't hear you well. I can actually hardly hear you. Sorry.
Okay, we'll see if we can
Now I can hear you.
Now you can hear me? Okay, we're very happy to have you here. I was just telling our audience that you are known for your contrarian and very edgy and daring investment approach. And nowadays, it seems that your nickname, your nom de plume, is more relevant than ever because we live in quite the doomy times. We were wondering, what is your take on the current state of the world and this pandemic that is wreaking havoc on the world economy?
Well, I think that, first of all, the issue of being gloomy or not gloomy is a question of your attitude towards life. So you may be negative about certain development, economic, financial, political, and so forth, and still be personally quite optimistic about how you will deal with these new conditions. So I think especially young people, they have to realize that life is a constant process where one door opens up and another one closes down and the life goes on and you just have to adapt to the changes. Economically, it's impossible to be very optimistic, largely because we have incompetent governments that more and more take your personal freedom away, become larger and larger, largely because of irresponsible monetary policies. And as they become larger, they become like a cancer in your body and inhibit sound economic growth. That has to be seen very clearly. And whether the stock market goes up or down has little to do with actually real economics. It has to do with money printing.
Yes, and you've said before that once you start printing, it seems impossible to stop it. When do you think we will return to a more normal monetary policy? We've seen the Fed loosening even its mandate even more. How do you see this going forward?
Well, I hope that in Belgium, in the museums, they still keep some guillotines. And I think what has to happen in order to go back to a more normal system, whereby the definition of normal is not so easy, but the money printing that we have had, especially after 2008, beginning with the QE1 in the United States, has been remarkable in many ways. And in my view, it has actually had a damaging impact on real economic growth and on the prosperity of the majority of people. It has created huge wealth for a narrow number of people, but it has created not necessarily misery, but say unfavorable conditions for the majority of young people, because we have precise statistics on this. Young people today, say the cohorts of the millennials and the Generation Z, the ones under 35 basically, they earn less than their parents at the same age, and at 35, they have less money than the parents had in real terms. So this is now, in the history of capitalism, the first generation in the Western world that is truly worse off than the previous generation. I'm not talking about generations in China under Mao Zedong. I suppose that most young people were worse off than the previous generation, or under the Bolshevik rule, and especially under Stalin. I suppose that young people were not better off than their parents were. But in the Western world, this is an unusual occurrence. And that then creates, as you know, some social instability and political instability.
And what should be, in your opinion, the correct answer then to revamp the economy? There's lots to do about whether it will be a V-shaped, K-shaped, L-shaped, X-shaped recovery for the economy. When do you believe it will get back to its pre-crisis levels, if it ever will?
Well, you're asking the question to a person like myself, who is over 70 years old. When will you run again a marathon and achieve the same times you achieved when you were 20 years old? Or when will you race again in World Cup races on skis as you did when you were 20 years old? I think certain things are not going to come back. And in general, I believe that the world will have to undergo a huge reset before we can go back to sound economic growth. I think the medicine that the central banks and the bureaucrats essentially administer to the economy are very negative for economic growth. And so unless you have a regime change, and as you know, there are lots of people in governments and in the private sector, the elite, that benefits from the current conditions. By the way, also fund managers, because money printing lifts the assets, the financial assets, and as a result of rising financial assets, the fees also go up for fund managers. So I'm not complaining as an individual because I benefited from this asset inflation. But I'm observing this as an economist and as a social observer, that this kind of illusion of wealth has bypassed the majority of people who are not participating in the asset inflation. And in the case of America, 50% of the people have no money. So they're not participating in rising stock prices.
And how can we have more people participate in this, democratizing stocks, for example? Which role can maybe fund managers play in making portfolios more accessible to a wider public?
Well, this is a good question. I mean, if we go back to the beginning of recorded history, say 5,000 years ago, up to today, a recurring problem of society was that there were always lots of poor people and a few rich people. And when this inequality became extreme, where the majority were actually suffering or had not enough to eat and so forth, it usually was resolved through some kind of a revolution or some kind of a war. So it's not a very optimistic scenario if we look at the possibilities of making everybody rich. I'd just like to add this. You know, lots of people complain about the capitalistic system and so forth. And one inherent characteristic of the capitalistic system is inequality. You have people, it's like Darwinism. Some adapt to the world, some animals, and they eat the weaker ones and they survive, and some don't. And in the economic sphere, in the capitalistic economy, inevitably there will be inequalities, inevitably. The problem is that, as Milton Friedman clearly showed, our system of capitalism, despite its disadvantages, and this we have to acknowledge, has created around the world more wealth and more people who avoided poverty than any society before. We have nowadays lifted out of poverty more than 1 billion Chinese, more than 1 billion Indians, the former Soviet Union, and so forth. I can tell you, at least half the world's population that lives in what we call emerging economies are today better off than their parents. In China, they're now, at least last year, maybe this year is less, but there were 140 million Chinese traveling outside the country. In 1985, nobody traveled outside the country, and so forth and so on. So we have a lot of indicators that show that really a lot of people are much better off under the system of free markets, capitalism, where someone can say, okay, I'm willing to work harder, and so he earns more money, and then he can go and buy a car or a motorcycle or go on a holiday. That was not possible under socialism and communism. And as some observers said, socialism and communism is a sharing, an equal sharing of miseries. Capitalism is an unequal sharing of essentially prosperity, but it's unequal. And we need to see very clearly the current young generation is not prepared to make the sacrifices your grandparents did and your parents did by going into World War I and fighting in World War II and so forth. They're not willing to do that. And until the 1930s, throughout the expansion, the rapid expansion, industrialization of the 19th century, there was no social security. If you lost your job, period. Nobody helped you. So you had to go and lift your A and work and take and assume personal responsibility. That, I argue, the young generation is less prepared to do so. They're much more concerned with what is politically correct and to what they're entitled to, and they all feel very victimized. It's hard to say, but this is the case.
Okay, on the other hand,
we are now all victims of somebody. You are the victim of your evil parents or grandparents or of whatever ancestors and governments Belgium had and so forth. And I'm a victim because my parents were divorced, and I'm a victim because I was sent to Asia when I was 26 years old and so forth.
Okay. On the other hand, we see a vast part of the young generation partake in financial markets, the so-called Robinhoods that are doing their first endeavors in the stock market. How do you welcome this phenomenon? Do you think they're large enough to move the markets? And how can we address the growing young investors that are out there?
Yes, but quite frankly, do you or any one of your listeners really believe that an economy will create wealth by having the whole youth trading stocks through Robinhood and other trading platforms these trading platforms, they sell the order flow. In other words, someone places the order, that order is then sent to companies like Citadel Securities, which then can front run the Robinhood traders. Now, does really someone among your fund managers, who I hope are educated people, believe that these people will ever make money, aside from once a while winning the lottery? I follow the Robinhood traders very carefully. But if you look at the list of their largest holdings over the years, all their stocks went up a lot for a few days or for a few weeks, and then they went down a lot. The largest holdings of Robinhood traders 2 years ago were essentially the cannabis stocks in America. They all collapsed by 90%. More recently, it was that there were stocks like Kodak and Nikola, also up and down. So, I mean, quite frankly, I hope this is the problem of central banks. The central banks have contributed to a population that is dumbed down, that trades stocks the whole day, instead of learning some special skills with which they could make money.
Okay, and when we zoom further in on the stock market, we've had a wild ride already in the past 8 months. But stock markets, as you said, especially in the US, they have rallied. Do you think the worst is yet to come for risk assets?
Well, this is a very good question, because what is a risk asset? When I grew up, say, in the 50s, no risk asset was to hold a deposit with the bank. Ein Sparkassenbuch. It was a savings account, and there they entered the interest every year in your book and so forth. That was safe. Nowadays, tell me, to hold cash, is it safe? You have negative interest rates. If I buy a 10-year Swiss government bond, I pay now, for a zero coupon bond, I pay 110. So in the next 10 years, I'm guaranteed to lose 10, okay? Is that safe? Well, someone will come and tell you, yes, it is relatively safe, because people who own shares and real estate and corporate bonds and collectibles and art, maybe they lose 90%. So to lose 10% when everybody else loses 90% is a very good investment. I don't know, but I'm questioning the view of what is safe. I think safe in today's world, where you and I and none of your listeners or viewers knows exactly how the world will look like in 5 years' time, I suppose that safe is diversification into different assets, and safe is also a geographical allocation of your assets, so that if one country nationalizes everything or expropriates everything, you still have some assets somewhere else. Because I've seen, and I heard in my life, of many instances where people lost everything because they were expropriated. Entire families lost everything when the Suez Canal was nationalized and when Nasser essentially nationalized all industries. And the same was the case in the 1917 Bolshevik Revolution, then in Eastern Europe after World War II, in China in 1949, in Vietnam after the Vietnamese War, that is not that long ago, 1975 was finished. All the holders of properties, they lost everything, including some of my friends.
Yes, okay. Okay. When you said geographically allocating, spreading your portfolio would be wise in this day and age. We've seen the China markets recently opening up to foreign capital. How big do you think this influx will be? And we see many IPOs now on the starboard in Shanghai. Are there any bubble kind of characteristics coming to mind to you, both maybe in China and on Nasdaq on the American market?
There are bubbles everywhere, whether it's in the government bond market, in the corporate bond market, in new issues, in the government debts and so forth. Bubbles everywhere. But there's one thing I have to point out. If you look at the 19th century, the industrialization really took off in Europe, particularly in the Industrial Revolution in England and then in Germany, but also in France and Belgium and so forth. And it gradually spread to the US. Actually, spreading is probably the wrong word. The US encouraged the theft of intellectual property from Europe into the US. That has to be spelled out, because the US constantly accuses China of intellectual property theft. The US stole everything from Europe, everything. So anyway, once this is put clear, the investors in the 19th century, they had very active stock markets, obviously, in Eastern Europe and in Cairo, and in St. Petersburg, and obviously also Vienna was a very active stock market, and London and Paris and so forth. But some capital flowed to the US that was considered to be high-risk capital. They went to the US and financed the construction of canals and of railroads and of mines and some initial industries. And this was risky capital. But in general, the investments in America over a long period of time, especially if it was in real estate, was a good investment. Now I'm saying this, if you look at some Chinese companies, they are already today the largest companies in the world, say in beverages, beer and so forth, liquor, because you're dealing with a market of 1.3 billion people. You're not dealing with a market of 300 million. And whereas there is a lot of prosperity in America and in Europe, after one bottle of whiskey a day, it's difficult to drink a second and the third one. Some people can, I admit that, especially fund managers. But the point is, in China, you have a huge market, as well as in India and in Indonesia and in Bangladesh and in Pakistan and so forth. And these markets offer huge opportunities, for foreign brands, but also for domestic brands. The largest beer brands in Thailand are not foreign brands, they're local brands. Ditto for China, ditto for India. So we have the emergence of local brands and also of local quality brands. This Westerners have to understand. Just the other day I read a single malt whiskey from India was voted as the third best quality whiskey in the world, from India. Wow. We have Japanese brands that are among the best. We have Taiwanese brands that are among the best. So this is a new world, and I'm suggesting to every investor, A, you have to have some money in China, whether you like the Chinese or not, whether you like their policies or not. But you have to understand this is a country that economically is dwarfing everything else in the world, period. Number two, you have to own some precious metals, whether you like it or not. And since your seminar is for professionals, I'd say the majority of investors, even professionals, they probably have not even 2-3% of their portfolios in precious metals, but I think they should have much more. So there are certain things that you have to do, whether you like it or not. And one of the things that you should have are investments in China. I'm not saying the timing is perfect, because good Chinese companies have become quite expensive and have gone up a lot already. But this is also the case in the US, where the Nasdaq is in the sky, and where companies that the FANG and related stocks are relative to the rest of the market very expensive.
Okay. I would sure like to try that whiskey, by the way. But when we zoom further in on the drivers in the market right now, we see that there's a lot to do, apart from Corona, of course, about the US election that is promising to be messy, or in the worst case, even disputed, the outcome. What do you think will happen? Who should win this election? And will it make markets more volatile in the coming months?
Well, one of the questions you're asking is who should win this election? In my view, both candidates are completely undesirable. One, from a character point of view, is really not someone you would want to have as a role model for your children, Mr. Trump. The other one is not a role model either, because it's been essentially well documented that he is also dishonest and corrupt, but he projects a nicer kind of a man than Mr. Trump. But the problem with him is he is not 100% up in his brain anymore. It's sad, but this is a fact that he's not 100% capable anymore to fulfill the function of a president of still the world's most powerful country. So I think both candidates are undesirable. Who will win? I think that Mr. Trump has a good chance to win. Because, as you know, in a democracy, people are very concerned about security. They don't want to live in an area where the rioters come and break into shops and destroy and damage the roads and your cars and everything, and where it's unsafe for you to walk at night on the street and so forth. So Trump, he projects the image of someone who is concerned about the safety of people. Number two, I think that a lot of Democrats, they are concerned that Mr. Biden will only be a president for maybe 6 months or 9 months, and then Kamala Harris will be the president of the United States. And she's an unknown kind of a factor as a president. So I think that Trump has a good chance. Having said that, I also want to stress that the election results will be contested. It doesn't matter who wins, Trump or Biden. Both will be reluctant to accept the results. And I think chaos will follow. So because of the election, I wouldn't be very optimistic about stocks. But as I said, the Fed has said they'll keep interest rates at near zero for 3 years. And at the moment, they're going to expand the balance sheet. They're printing money at the rate of $120 billion a month in 1 month. So we have this QE that, in my view, will support maybe not all asset prices, but at least in general, it's supportive of real estate prices, it's supportive of commodity prices, it's supportive of equity prices and bond prices. But of course, at some point, something will break, and some assets could go up a lot, and others could go down a lot.
Okay, and what could this further QE potentially mean for the dollar? We've seen that it has been surprisingly strong in the past period, but the euro has, in the past few weeks, had made a bit of a comeback. How will you say this will evolve further?
Well, I mean, in general, you can't be optimistic about the US dollar. Having said that, let's look at Europe and let's look at the US. They're like two huge cruise ships that have a leak and that are sinking. The captain can still sail, but more slowly, and the ships are tilting on one side continuously. And some cabins at the bottom of the cruise ship may already be flooded, but the luxury cabins at the top, where the elite has their rooms, is still okay. Now, they are heading towards a safe haven, but at a slower speed. And the question arises, which of these two cruise ships, Europe or the US, will sink first? That is the question. And who will be affected first on these cruise ships, and who will stay alive reasonably well until they sink? And lastly, that is the big question as an investor. They are lifeboats, okay? You can choose to go on a lifeboat early, but then you miss the bar and the good whiskey and cognac and Calvados in the ship's bar, and you are stuck on this lifeboat heading for land somewhere. Or you can say, okay, up to now, I don't see any problem. The ship is sinking, but it's sinking so slowly that I will be able to get away anyway. And by the way, I've already bribed the captain to let me have a seat on one of these life rafts so I can escape at any time. So there are lots of possibilities, but I'd say this. The money printing in the US will lead to extended dollar weakness. The question is a little bit against what? This year the dollar has been strong against the Brazilian real, against the Turkish lira, and against the Russian ruble. It's been weak relatively against the euro. The euro is up 5% this year against the US dollar. And but in general, I think it will go down. I think both the dollar and the euro will go down against precious metals, and most likely against a basket of depressed commodities that would include agricultural commodities. Agricultural commodities are very, very inexpensive. I mean, very cheap, very distressed. And industrial metals are also rather distressed. And I think in the current money printing environment, at some point we could get commodities inflation that then leads to consumer price inflation. This is possible. So far, the money printing has led to asset inflation. In other words, prices of homes have gone up, and prices of paintings have gone up, and prices of stocks and bonds have gone up, but not so much, say, the price of a banana or so. But it could happen.
Do you think that it could happen? Because it's a big subject right now. There are economists are going all directions on whether it will be stagflation, deflation, hyper-deflation, demand pull inflation, you name it. What will be? Will we have inflation again in the West? And what form will it occur in?
Well, we have a lot of inflation, as I said, in asset prices, and this has led. This is, in my view, a little bit a failure of, or a big failure of our current financial system. It has led to the inability of many people to actually buy a house or to retire in decent conditions, because the rents, say in Belgium, in Brussels, in the center, houses are very expensive, rents are very high, and so forth. So a lot of people have been driven out, and they have to live in the countryside somewhere. Now, this is an important trend that will occur. As you can see, we have a conference now, a remote, a cyber conference, essentially, or a virtual conference. But now, this is a trend. I think a lot of people will no longer live in city centers. They will choose to live somewhere remote in the country. And properties in Europe, in remote areas, Spain, Portugal, Italy, even Germany, France, anything in the countryside compared to the city centers is very cheap. So these properties now are going up because you and I, we can have this conference living anywhere in the world in the countryside. We don't need to be in a city center. So that will boost the prices of properties in remote areas, and it will have a negative impact on properties in city centers, very negative.
Okay, that should mean I will have to sell my city house. No, thank you so much, Dr. Faber. I see that our time has come to an end, but I think you have presented us all with some very insightful tools for the rest of this seminar.